Hey investor, it's Lior, and if you are a foreign national trying to use Section 8 income for a DSCR loan, pull up a chair, pour some espresso, and brace yourself. So, real estate mortgage updates for May 2025. Mortgage rates for DSCR loans are hovering around 7.5% to 9% depending on LTV, reserves, a property type. We closed 5.61 for a foreign national. Inventory remains low in key investment markets like Florida and Texas, keeping prices stable despite Fed tightening. So in this podcast, we are going to go over Section 8 and DSCR loans. We're going to see market updates, what's going on in the markets currently. And of course, we are going to deep dive into everything that got to do with mortgages. So lenders are tightening guidelines again, especially for foreign investors. They are not just checking your bank statement. They want to know if your rent is coming from the government, a tenant, or a unicorn. Today's topic, DSCR loans plus Section 8 rents equal complicated. Can foreign investors use Section 8 rental income to qualify for DSCR loans? And short answer is yes, but there's always a but. So we are going to look into that today. So here's what the lenders care for: stability, delays, documentation, and we're going to jump into an example. Before all of that, I want you please join our channel. We have videos going on every day about mortgages and real estate in the US. So smash that like button and subscribe. Let's see what's the market are doing today. All right, so first of all, we have the treasuries, the 5-year treasuries that our mortgages rates depends on. We can see that it went up a bit. We're going to look at the economy today, and actually the economy seems stronger than ever. What does it say about the Fed? Is the Fed is going to lower the rates or no? All right, so we are going to look into that. So as for the news, Warren Buffett is stepping aside. We see the markets quite flat today, not much of a change. Okay, we can look at the treasuries. The 2 years, the 5 years, the 7 years, and the 10 years are moving up a bit. We can see the 30 years mortgage rates 6.9, the 15 years fixed rate 6.22, and the jumbo 7.02. And let's take a deep dive into mortgage rates. So here we get up to the minute updates on what's going on with interest rates. So we can see that the 30 years actually dropped a bit today. So let's watch a video talking about what is going to happen with the bonds.
Well, in the meantime, bond yields are jumping on economic and trade optimism today. Rick Santelli, he is in Chicago, jelly bean free. And, you know, we're not trying to make too much of these markets being up, but Rick, you got to admit, even for Rick Santelli, this has been a pretty unbelievable comeback the last couple of weeks.
Not for me.
That's why I said
I think it was on this show, actually. I think it was on this show where I talked to you and Kelly and said I would be dipping my toe in about 3 weeks ago. Listen, to me, I agree with the last guest wholeheartedly. All the adages, Farmers Trading Almanac, toss it all. You know what? It was a man-made event, and I sincerely believe that all the green in the markets is much smarter than all the naysayers in the economic community. Let's look at a 2-day of 2s and a 2-day of 10s on the same chart. A couple things should jump out at you. First of all, yesterday we broke an important streak you need to be aware of. We had 5 lower closes in 2-year, that ended. We had 7 lower closing yields in 10-year, that ended. So there is a turnaround going. And when you get a turnaround like that, you get the kind of upside that you see on those two charts. We're up 5 basis points right now as we, we're up 12 basis points in a 2-year. We are now up 9 basis points in a 10-year. Now let's move to the weekly chart. Also very important. Coming in today, I thought it would be really tough to turn the weekly numbers up. That's exactly what we did. We settled at 370 last week. 370. I'm sorry. 375 last week. So look at what we've done. And in a 10-year, we settled at 431-ish. Right now we're trading, but we're at 424. So 320.75 and 424, up 5, up 7 on the week. Didn't think we'd see it. And it wasn't only the 8:30 data on the jobs report, Brian. Even though we lost 58,000 on revisions, it was a solid report. But at 10 o'clock, we also really held on to some of the gains in factory orders and in durable goods. And even though a lot of it was aircraft, if you look at the charts there at 10 o'clock Eastern, we started to build on the upside again. These are aggressive closes, and I contend that the statement for the 10-year for the rest of the year is not going to spend much time under 4%, in my opinion. Back to you.
Rick Santelli, you did say towing. Appreciate it.
All right, so we can see the live data here on the MBSs dropping down. Let's see the economic calendar for this week. So today we had the S&P Global Services PMI, the forecast 51.4, prior 54.4. The actual is actually 50.8. So we see that actually numbers are looking good. So the chances of lowering the rate by the Fed is actually going down, because basically the Fed sees that we are quite strong even with the tariffs, and the tariff is most likely going to be a one-time hike in inflation. Let's look at the fear and greed. So just 2 weeks ago, we've been in fear, and a month ago in extreme fear, we just turned into greed. Right. So home prices appreciation remains, but interesting trend emerges. So let's jump into that. We're going to jump into that today. And we can also see the recent development with the Fed. The Fed aims basically to keep the inflation low. So the goals are quite met. The goal is about 2%. We are at 2.3%. Unemployment rate, quite stable. All right. The only thing that we currently have an issue with is the GDP, which is too low. And let's look at the forecast. So basically, the next decision of the Fed is going to be tomorrow, one day, all right, Wednesday. And we can look at probabilities. So basically, if we are looking at the probabilities, we can see that as for the upcoming meeting, all right, you can see that 97% believe that it's going to remain same, all right, and also for the next meeting, because basically we saw very strong data. All right, so let's see some updates in our Nadlan social network, all about mortgages. So today we are going to go over everything that got to do with Section 8 and getting financing in the US. If you're still not part of our network, go to forum.nadlanusa.com, join our network, and you will get a lot of daily insight about the market. You will be able to join all of our courses, our social network, read daily news about real estate and mortgages, join our groups. You can see all of the discussions groups. There are like almost 300 of them. And if you don't know much what we do, we are one of the largest mortgage brokers in the US. We work with foreign nationals and Americans. We are doing an auction between more than 3,000 lenders. We're also building in Texas and Florida. Here you can see the members, and we're also running events and teaching wholesaling, multifamily, and so on. And we also share daily off-market deals on nadlandeals.com. You're more than welcome to join. We have hundreds of experts on the site, and this is our website, nadlancapitalgroup.com. And we also share daily updates and predictions about the stock market and trades. So let's jump into that first. All right, so basically, as for today, pre-market trade plan, navigating the market volatility, strategic approach to current market condition, data-driven insight for experienced day traders. All right, so let's first see what's going on in the markets. April jobs report beats expectations, 177,000 non-farm payrolls, above the estimate of 138,000, 4.2% unemployment rate matched expectation, and 3.8% hourly earnings year over year, slightly above the 3.9% estimate. Overall, very strong numbers. Okay, so we can see the corporate earning outperform S&P 500 growth and annual rate. Okay, so we can see the annual rate expected 225 and the actual 257. And here we can see 225 compared to 257, as I mentioned. All right, so let's look at the economic resilience amid uncertainty. So GDP contracted by 0.3% in quarter one. Underlying demand remains firm, strength in retail, restaurant, and home building. Modest growth expected in quarter two. Let's see what markets are moving, the moving news. NVIDIA considering Bitcoin for balance sheet. This is going to be huge. So if NVIDIA is going to add Bitcoin to its balance sheet, they have so much cash that can push Bitcoin up. Goldman expects 3 Fed rate cuts. So even though we saw that the probability of rate cuts is going lower, Goldman is expecting 3 Fed rate cuts, potential catalyst for market upside. And Trump hints at possible trade deals. So Trump, again, we still didn't see the deals, but hopefully this week we're going to start to see them. Every such deal can push the markets up. So key index levels to watch. Okay, the QQQ, the NASDAQ, 485, 481, if we're going downtrend, up to 466. And the SPY, 562 up to 550. Markets opening near Friday's low. Pullback expected before potential upward move. So because we saw the longest streak of uptrends, 8 days, we didn't see something like that for 20 years, since 2004. Of course, we expect a pullback, but even today we saw some pullback, but we kind of like finished flat. Trading strategy for the week. Prepare for the FOMC volatility. Big market move likely Wednesday. All right, when they're gonna announce if they're going to change the rates or not. The Fed. Trade cautiously early week. So there's no much setups for today. The market is volatile. We're still looking to see where it goes. Watch for pullback opportunities. All right, QQQ potential targets 476, 466. Specific stock opportunities. HIMS opening green despite market weakness. HIMS just got approved for the actual drug and not just like a mock-up for Wegovy. So we saw HIMS jumping more than 20%. APP 460 points. Jeffries retrace buy rating, and NVIDIA Bitcoin news may create volatility. All right, so today we are going to deep down understanding DSCR loans for foreign nationals. So this is one of the updates that we posted on our social network. So let's jump right in. And let's
Welcome to the deep dive. Today we're looking at something pretty specific, but really important for some investors.
Right. We're talking about financing U.S. real estate if you're a foreign national.
And specifically, what happens when you're looking at properties with Section 8 tenants involved?
Yeah, that combination can make things, well, interesting from a financing perspective.
It definitely sounds complex. So our mission today is really to break it down, make it clear.
We're drawing on some great insights from Nadlan Capital Group. They specialize in this exact area U.S. real estate finance for foreign nationals.
Good source. So we'll cover the main challenges, how these different factors kind of bump into each other.
And we've got a real world example too, which I think really helps illustrate the points.
Perfect. And then we'll wrap up with key things you, the listeners.
Sounds like a plan.
Okay, so let's jump in. Investment properties. People often talk about loans. Can you give us a quick rundown? What are they?
DSCR stands for Debt Service Coverage Ratio. Basically means the lender is looking more at the property's income potential.
Okay.
You know, can the rent generated cover the mortgage payment and other costs? It's less about your personal income compared to a traditional.
So that sounds like it could be attractive, especially for foreign nationals, maybe without standard U.S. income.
It can be, yeah.
It can be, yeah.
But don't assume it's easy. Getting a DSCR loan as a national for a Section 8 property. Well, lenders still scrutinize things really closely. They're worried about consistent cash flow.
Right. The property has to stand on its own financially. So why does Section 8 specifically make lenders a bit twitchy with these loans? You'd think government-backed rent is a good thing.
You would think so, and it is in some ways. But lenders, they look at the whole picture. They often worry about, say, the condition of the property, sometimes found in the Section 8 program. They might perceive higher tenant turnover, which means potential vacancy period. Plus, sometimes these properties require more intensive management, and any gap in tenancy, any delay that directly hits the debt service coverage ratio they rely on.
So even with the rent guarantee, the operational side, the day-to-day management creates uncertainty.
Exactly. Operational risk is still very much on their minds.
Okay, so that's the Section 8 angle. Now let's add the other layer, the borrower being a foreign national. How does that complicate things?
Well, generally speaking, lenders tend to view foreign national borrowers as carrying a bit more risk than, say, U.S. citizens or green card holders.
Why is that?
It often comes down to things like maybe having less access to a full financial history that fits neatly into U.S. credit models.
Right.
There could be complexities with international legal stuff, verifying assets overseas, and often the borrower might not have a security number or long-established U.S. credit score.
Got it. So how do lenders usually react to that perceived?
Typically, you'll see tighter terms, lower loan-to-value ratios, or LTVs, often capped around, say, 60% to 65%.
So a bigger down payment.
Exactly. And potentially higher interest rates, too. The whole underwriting process tends to be more rigorous.
Okay, so we have these two factors, Section 8 properties seen as potentially higher risk operationally, and foreign nationals seen as higher risk from a borrower profile perspective. Put them together.
And yeah, you get a compounding effect in the lender's eyes. It definitely increases their caution.
They see it as layered risk.
Pretty much. They already have some reservations about Section 8 properties, and then you add a borrower profile they find less familiar or predictable by U.S. standards, they're likely going to be more conservative.
This really highlights the need for specific examples. You mentioned Nadlan had a client, Avi. His story sounds like it hits all these points.
It really does. Avi was a foreign national, and he was looking for financing, aiming for 65% LTV on a portfolio of properties. And yes, some of those properties had Section 8 tenants.
Did he have any advantages? Any U.S. financial footprint already?
He did, actually, which makes the story even more telling. He had a U.S. bank account for years, had U.S. credit cards linked to his ID.
That's the individual taxpayer ID number.
Correct, for non-residents. He was actively trying to build his U.S. credit. So compared to some foreign investors, he's actually quite well positioned.
Okay, so he sounds like a relatively strong candidate, all things considered, but still faced challenges.
He did. Nadlan Capital Group, they really went to bat for him. They took his application out wide, contacted over 300 lenders.
Wow, that's expensive.
It is. And they managed to get 11 solid offers back. Initially looked really good, an interest rate of 6.96%.
That sounds quite competitive for a foreign national right now.
Very much so. He was quite keen on that one. But here's the twist. When they went to finalize things at the 65% LTV, he wanted.
Uh-oh.
The lender came back and said, hold on, Because he's a foreign national and there are Section 8 properties involved, we can't go above 60% LTV.
So the combination was the explicit reason, even with that competitive rate offer.
Exactly. And what's interesting is this particular lender normally doesn't even do Section 8 properties.
Really?
Yeah. Nadlan's relationship and frankly the volume of business they do allow them to get an exception just to consider it. But even with that exception, the 60% LTV ceiling was firm because of the combined factors.
So the exception on Section 8 didn't override the caution on the LTV side when combined with foreign national status.
Precisely. Now, Avi did have other options. Other lenders came forward who were willing to offer 65%, even up to 70% LTV.
Okay, so he could get the higher leverage.
But the rates were significantly higher. We're talking 8.2% up to maybe 9.75%. A huge difference.
Wow, so that's the classic trade-off right there. More leverage, but at a much steeper borrowing cost. Or less leverage, but lock in that better rate.
That's exactly what he faced. It perfectly shows the balancing act. He's putting less money down upfront, paying substantially more interest over the years. It's a tough calculation.
Absolutely. So for our listeners, maybe people thinking about this test, what are the real key takeaways from Avi's experience and everything we've discussed?
Okay, I think there are a few. First, if you're a foreign national looking at Section 8 properties, just mentally prepare for needing a larger down payment. Expect LTVs probably around 60%, maybe 65% max.
Unless you're willing to pay those much higher rates.
Right, unless you accept the higher rate trade-off. Second, getting a lender to even say yes to Section 8 is a win, but understand that might mean tighter terms elsewhere, like that LTV cap we saw with Avi.
Okay, manage expectations.
Third, don't get fixated only on the LTV. Look at the total cost of the loan. Sometimes a slightly lower LTV with a really good rate is actually the smarter financial move.
Good point. Focus on the overall deal.
And finally, Avi's story shows the value of working with someone who knows the landscape. A broker like Nadlan with deep lender relationships can unlock options you just wouldn't find on your own. You get that initial lender exception.
Yeah, that access seems critical. And it looks like Nadlan Capital Group offers more than just the loan brokering, right? They seem to have a whole suite of services.
They do. Things like advisory services, help setting up U.S. bank accounts for companies, even access to deals. An integrated approach for foreign investors.
Which sounds really helpful when you're navigating a foreign.
Definitely simplifies.
So wrapping this up, it's clear that this specific niche, foreign nationals, U.S. real estate, Section 8, it's got layers of complexity.
Absolutely. Understanding how your status as a borrower interacts with the property type is just fundamental. You have to get that part right.
And Avi's experience really drives home that having the right guidance, the right resources can make a huge difference in finding a path forward.
It really can. And that leads us to a final thought. Maybe something for you, the listener, to consider.
Okay.
We've talked a lot about LTV and interest rates, but beyond those two big factors, what other elements should you, as a foreign national investor, really weigh heavily when you're looking at financing options for U.S. property? Something to think about for your own strategy.
All right. So we saw the example of Avi that basically was looking to get Section 8 DSCR loan. And basically, in order to get the best possible rates, we had to go lower for 60% LTV. He still could have got a higher LTV, but in that case, the rate would have been much higher. So as for the mortgage rates update, weekly trends, rate moved up this week despite mid-wing dip. Current average 6.9% for top tier 30 years fixed. This is, of course, for Americans that show 3 years taxes and 2 years W-2s and credit and such. So weekly rate movement. Last Monday, rates peaked at 6.98%. Midweek dropped to just over 6.8%. Today, back up to 6.9%. All right, so we can see the rate comparison here. Okay, last Monday, 6.98. And again, we closed for foreign nationals even below 6%. Midweek, we've been at 6.8%. Last Friday, 6.84%. And today 6.9, so we are hovering between the 6.8 to 6.98. The job report impact stronger than expected. Job creation exceeded forecasts. Market reaction, good economic news pushed rather higher. The lender response, many issued midday rate hikes. So let's look at the economic principles. Strong economy, robust job growth, inflation concerns, higher wages can drive prices up. Rate increases, rates rise to control inflation. Mortgage impact, higher borrowing costs for home buyers. And data reporting discrepancy, conflicting headlines. Okay, some report may claim rates are lower. Freddie Mac survey uses methodology with stale data, and the timing issue doesn't capture last 2 days of movement. So weekly rate timelines, last Monday 6.98, weekly is high, the week's low 6.8, Thursday modest bounce but still strong, and today 6.9, higher than the last week. All right, so you're welcome to contact us, Nadlan Capital Group, right here in New York. Go to nadlancapitalgroup.com for any question that you guys have. We are here all the time, happy to assist you. And of course, if you are looking to get any mortgage here in the US as a foreign national or as an American, you're more than welcome to contact us, and we will be happy to assist you and help you out. So let's go again for a recap of everything that we saw today. As again, using Section 8 for a rental property. All right, so initially Section 8 looked at very stable, especially during COVID, because once many tenants got exceptions of not to pay the rent, basically the ones that were on Section 8 actually been government backed, and that's a plus. The problem is delays. Payments can be slow or inconsistent. So lenders hate surprises more than expired appraisals. So from one end, you think, oh, it's come from the government. On the other hand, there are many times delays and documentation. You must prove the full amount, length of lease, and that is not a month-to-month chaos. All right, so the example case that we saw, a foreign national investor applies for a DSCR loan using Section 8 income. The payment history is messy. The deal looks great, but lenders throws it into the too complicated pile faster than a declined W-2 loan. The list doesn't list all rental subsidies. The file stalls. Why? Unclear subsidy terms, uncertainty, equal, denied, or downgraded DSCR. All right, so smart tips for success. Provide a 12-month payment history from the housing authority. All right. Get a clean copy of the lease that spells out the Section 8 portion versus tenant portion, and explain everything in writing, especially if payment changes occurred. Final word for today. So basically, Section 8 is possible, but you need to follow the guidelines and make sure, to use a professional that can navigate you. I can tell you that many times we use some pressure on the lender to get exceptions for tenants if it's a late payment, if it's Section 8, if it's properties below 100K, and if it's the condition of the property. So many times we could get exception for tenants. So again, about us, Nadlan Capital Group, one of the largest mortgage brokers in the US. We work with more than 3,000 lenders. You're more than welcome to contact us if you're looking to do any investment loan that is not dependent on you. We're not looking at your income. We're not looking at your taxes. If you're foreign national, you don't even need to have credit. So thank you everyone for joining us, and we will see you in the next update.